The FX market is getting ready to close out a week that didn't really manage to produce all that much in terms of market moving influence. Looking back, the economic calendar had already warned of a more subdued week of trade with very little in the way of first-tier releases. Meanwhile, the outlook for both U.S. tax reform and Brexit negotiations failed to offer meaningful clarity. We did get a little more detail on the tax reform front, but not enough for the market to be able to determine just how effective the reform would be. And as far as Brexit negotiations went, it was all quiet on that front. Another storyline that was thought to possibly inspire volatility this week was President Trump's Asia tour, but nothing really ever came of that. We shouldn't forget about the weekend developments in Saudi Arabia that resulted in oil surge to plus 2-year high, but again, the market seemed to have that all digested on Monday. Looking at the performance in the developed currencies, they did manage to outperform the US dollar over the past week, though all of the gains were contained to well within 1%. Only gold managed to exceed the 1% threshold. There were some cracks in risk markets on Thursday, but we got the usual end-of-day recovery rally that called all of this into question. It does feel like there's plenty of uncertainty out there that should ultimately weigh on a bubbling global equities market, and the Bitcoin craze shouldn't do anything to comfort these prospects, with this market reaching euphoric levels second only to the 17th century tulip mania. We believe that all of this warns of a perfect storm of events in the pipeline that could shake things up in a big way. Looking to the remainder of the day, the market will be focused on any new developments relating to Brexit negotiations, U.S. tax reform, and President Trump's Asia tour. On the data front, the focus will be on UK readings that include industrial production, trade, and NIESR GDP estimates. Later on, we get Michigan confidence. Earlier today, the RBA SOMP produced expected downgrades to GDP and inflation forecasts. That's all for now.